Assalamu alaikum. Today I'm going to cover the topic of the federal financial statements. This video is just an introductory video in the stream, and I will discuss the in-depth nitty-gritty about the federal financial statements in the future videos. So to start with, uh, let's move on to the question, where can you get the federal financial statements? The federal financial statements of Pakistan, the Islamic Republic of Pakistan, the example I'm going to use, are available at cga.gov.pk. So what you can do is you can go to the CGA website, cga.gov.pk. Over here, look at the reports. These are all the financial statements that are available. So you can see the federal government financial statements, the government of Punjab, Sindh, KP, Balochistan, AJK, that's Kashmir, and Gilgit-Baltistan. You can also find the consolidated statements over here. So I'm interested in the federal ones. So I'm going to click on the federal government financial statements. Okay, the federal financial statements are available from 2008, 9 to 2021, 22. Uh, Notice this, there is a link that is not working over here. So we do not have the data for 13, 14. But because every year we have comparative financial statements, so 2013's data will be available in 12-13, and 2014 data will be available in 2014-15. So if you're doing any research using the federal financial statements, you will have complete data set over here. So you can download these financial statements. I've already done that. So over here, I have the financial statements of the federal government, 2021-22. That's the latest year that the federal financial statements have been uploaded. So that's very progressive of the government, since we are already in 23. So up till 22, the financial statements have been uploaded. The federal financial statements also follow the fiscal financial year. So I will start by discussing a few key questions about these statements. These statements are made by the Controller General of Accounts. He is the biggest authority of accounts in the country. They are audited by the Auditor General of Pakistan. He is the biggest authority and the supreme auditor in Pakistan. And the statements are approved by the President of Pakistan. Every year, the President's seal approves the financial statements. So the next thing is, what is the measure, or what is the flow through which the money passes that we can see in this federal financial statements? So the financial management cycle of Pakistan goes like this. First, there's a legislature made by the parliament. Some changes, some money outflow that the parliament approves. Once the parliament approves it, there's an authorized budget, and the finance department of government do the preliminary work. From there, that notification goes to the appropriate department and executive body, which start doing their work on the legislature. So for example, you're constructing a ring road, or you're constructing the orange train. So the parliament approved it, the budget was authorized, the finance ministry approved that exercise, and then the work started on the ring road and on the orange train. Once the work is done, along the whole process, receipts and other measures of accounting control are ensured. by the Controller General Accounts and his team. So the Controller General of Accounts make the financial statements of all the uh, for whole of Pakistan, or for a whole of a province. And then these financial statements are sent to the Auditor General. Like any other auditor, the Auditor General also gives an opinion whether the financial statements made by the Controller General gives a true and fair view of what happened in the last year. Once you have the audit report, it is sent to the Public Accounts Committee. The Public Accounts Committee is a subcommittee of the Parliament. Its major aim is to see and ensure um, fiscal commitment, and therefore the Public Accounts Committee looks at the federal financial statements and then they present this report to the Parliament. So the report is presented to the Parliament. The Parliament approves it. Once the Parliament approves it, the President signs it. And that's the closing of the financial statements of that year. Now, the federal financial statements are made with regards to first the divisions and then the functions. So what's the difference between division and function? A division is a self-contained unit for the conduct of business of a federal government. And it could be a ministry or any other unit of the government. Each ministry or division may have attached departments working directly under it to perform specific functions. So there are multiple divisions and all of them may be performing the same function. So when we are talking about functions, our focus is that subpart, the function that is being conducted by the divisions. So example of divisions, a few example of divisions are the Cabinet Division, the Petroleum Division, the Foreign Affairs Division, the Power Division, and the Housing and Works Division. Each of them are a subunit of the government. They're working on their own. On the other hand, functions are something that a lot of other divisions are doing. So defense awareness and services, military, army, navy, all of these are involved in defense affairs. So defense affairs itself is a function which is performed by multiple divisions. Similarly, education affairs and services, it's done by the foreign affairs, by the petroleum division, by the power division. So education is kind of a very broad scheme and it's covered by a lot of divisions. And then we have the environment protection function. So function versus division. A function is a subpart of a division that can be separated, while a division is a self-contained unit and it has multiple functions. Now, cash-based versus accrual-based accounting systems. The cash-based accounting system follows the cash, while accrual-based accounting system does not follow the cash. In the cash-based system, whenever you get the revenue, whenever you get cash, you recognize revenue. And similarly, when you pay for something, you recognize an expense. However, in accrual-based accounting systems, the link between cash and revenue and expenses and cash is broken. So revenue is recognized only when work is done, while expenses are recognized when the benefit from something is taken. So when you have a cash-based system, you will not recognize any assets as they are expensed as soon as they are recognized. Under accrual-based system, assets are recognized. Uh, the key definition or statement that defines a balance sheet is assets equals liabilities plus equity. When we do not recognize any assets, that means uh, there's no way to make a balance sheet. Thus, under cash-based system, the statement of financial position or balance sheet is not made. However, under the accrual-based system, the statement of financial position is the key. uh, all the four financial statement feeds into the statement of financial position. So this is the most important statement that is made. Okay. And what are the reports that are in the federal financial statements? So before I do that, I'll discuss what ordinarily any corporate which follows the corporate accrual based accounting system makes. What type of reports do they make? So the first and the most important is the statement of financial position with its key relationship assets is equal to equity plus liabilities. As I've discussed, the federal financial statements are made under the cash basis of accounting, and they will not include the statement of financial position. The second one is statement of profit and loss. That's your income statement. Income statement is simply the net income or the profit is equal to revenue minus expenses. And no, this is not included in the federal financial statements. The third is the statement of cash flow. Statement of cash flow is the change in cash because of the cash flow from operating activities, the cash flow from investing activities, and the cash flow from financing activities. This is included in the federal financial statements. The fourth one is statement of changes in equity. For a corporate, the equity holders are the shareholders. For a country, the equity holders are all its citizens. So essentially, the country never makes the statement of equity, but whatever worth it is creating through its financial policies, it is for the citizens. So the equity is actually for the citizens. Now, the statement of equity is given by the net income minus dividends, which is the retained earnings, plus any new capital raised minus any old capital retired. And no, this statement is not made. Lastly, we have the notes to the financial statements, which only explains the different set of line items in the reports. And yes, the notes are given in the federal financial statements. So if the notes are given, what are actually the things in a federal financial statements? So we have the statement of cash receipts and payments, which is simply what are the sources of cash versus what are the sources of payments. The second is the statement of cash flows, which is cash from operations plus cash from investing plus cash from financing activities. So both of them focuses on the cash side of the picture. The third and the fourth ones are the same cash flow statements, but by function and by division. And lastly, we have a statement of appropriation of grants. So where did we get the money from and how did we use that money? Which departments, which functions were paid from this money? And then we have the notes. The notes are the most important things. They explain the line items in any report and make it easier to understand and comprehend the reports. So I'm going to show you these things in the federal financial statement now. So federal financial statement. Okay. So what we have is this is the table of content, and from the table of content, see there's a preface, then management analysis. The management analysis is very similar to a director's report that you would see in a normal corporate financial statement, corporate annual report. So the management analysis you can think about as the director's report. And then you have the auditor's report. The auditors give their opinion whether the financial statements reflect whatever happened in the last year. So the any audited corporate financial statement would have the auditor's report. The only difference is where the corporate would have one of the many auditors. A federal company would always have Auditor General of Pakistan or one of his associates as the auditor. Then we have the five statements: statement of cash receipts, statements of cash flows, and the comparison of budgeted and actual amounts by function and budgeted and actual amounts by division. The comparison with budget is very important because at the start of the year, there's a promise between the people and the government that we are going to follow this budget. If that budget is not followed, then it could create problem for the whole government, as well as create the problems of needing more debt or not being able to finance other activities that are promised by the government. So this comparison shows which department, which divisions, and which functions performed well within the budgets, below the budgets, or had to spend over the budgets. The statement of appropriation of grants and the notes to the financial statements. The entire financial statement is about 41 page long, which has a preface about what is in the financial statements, and then we have this financial management cycle, the accounting and the management analysis. After the management analysis, the auditor reports the statement of cash receipts and payments. So on the first page, we have all the receipts: the tax receipts, the non-tax receipts, the grants and the aids, the borrowing, the capital receipts. So all the total receipts of the government. If you notice in 2022, the government have about 13 $13.4 trillion of receipts. And at the same time, the government has about $13.11 of payments. Notice receipts are cash inflows. Without having any form of cash inflow, we cannot have a cash outflow. So the receipts must be at least equal to the payments. If the receipts and the payments are not equal, then either the receipts would be more, but it's not possible to make a payment without having money. So it's very unlikely that the payments will be more than receipts in any given year. Then in the next report, we have the cash statement of cash flows, which states how much money came from the operating activities. And the Pakistan government lost about $4 trillion in operations. Cash flow from investing, how many new roads, privatization, etc., of those type of things. The things we did with our assets. And notice we lost another $1.1 trillion rupees from investing activities. Then we have cash flow from financing. How much debt did we take? And from financing, you will see that we took a debt of 5.28 trillion rupees to finance our operations and investing activities. For a country which boasts a very young population and a very large population, having negative operating and investing activities indicates that in the long run, we will be in very big problem. And now it looks like 2015 has become the long run of Pakistan. So over here, we have the statement of comparison of budgeted and actual amounts by function. You can see the receipts by function and the payments by function. And then you can see what was the original budget, the revised budget, and then its comparison to the actual value. Similarly, we have the same report for the division perspective from per division, and it's a very long report. Then we have the statement of appropriation of grants, which grant came in and how it was used, how much money of which grant was given to which uh, division in the in the ministry. And finally, we have the reports. So report one, like any corporate financial statement, would reflect which company, which laws were followed. Note two, a statement of compliance. And then we have the basis of, so notices the basis of preparation is cash basis of accounting. So the financial statements recognize cash as soon as they received it. And this is for a reporting period from 1st July 2021 to 30th June 22, which is the fiscal year. And the currency is in Parker P. Significant accounting policies, you can look over these, and then so on and so forth. The notes continue for about another 20 pages. So that's the federal financial statements. If you have any question about it, you can post it in the link comments and I can answer these questions in the next video. Thank you for watching. Please like and subscribe.